Welcome to Ask the Expert, an award-winning daily series from 8:30 to 9 a.m. to help small businesses. If you have any questions, please ask them in the comments of the live feed. And if you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook, where there are accountants and business experts on hand 24/7. During the live session, we will be running a poll, so please do engage with it, and I will reveal the results at the end of the show. And also make sure you're registered for QuickBooks free annual conference at QuickBooks Connect. Look out for the link in the chat. It will be taking place virtually on the 9th and 10th of March, and the event brings entrepreneurs, small business owners, and accountants together to grow, learn, and connect. I never miss out on this. I would really encourage you all to join if you can. So thank you so much again to everyone for joining me. My name is Eriona. I'm the Managing Director of Majors Accounts, which is a small family-run accountancy practice based in South East London. I am a Chartered Certified Accountant with the ACCA, and my background is in accounting and finance, obviously with a master's in accounting and finance, as well as my chartership. And I've also kind of dabbled in law as well. I've got a master's in law in international banking and finance, and also a postgraduate diploma in strategic finance from the University of Oxford. Safe to say, I think studying is done for me, although you can never say when you stop learning, right? I'm also a member of the QuickBooks Accountants Council and a member of ACCA's UK Practitioner Network panel and ACCA's SME Global Forum member. I've been working in practice since tender age of 13, so quite a few years now. And I've done this alongside my studies, which I believe has really helped to enhance that theory, putting it into practice and seeing, how business works, what business owners' pain points are, what their goals are, seeing ways how they can achieve those goals and how we can assist them in achieving those goals. So as I mentioned, we're a small family-run practice. We provide support to businesses in the SME space. So they're usually owner-managed businesses or small limited companies. We help kind of in a range of industries. Over the years, we've seen pretty much in every industry. We are niching towards the construction industry and property development, but nevertheless, we also have many clients in the hospitality sector, nurseries, IT, financial services, hairdressers, barbers, restaurants, pubs. The list really goes on. And since becoming managing director, I have spearheaded a digitalisation strategy within the business where we use QuickBooks Online as our main bookkeeping package. And then we have other apps which feed into QuickBooks. So we believe we've become quite an expert in this space, and everything now can be done online using an array of different apps, which, as I mentioned, all feed into each other and create an amazing streamlined experience for our clients who are busy running their business, and admin is not something which they feel is as important as running their business or finding new leads and so on. But actually, I'd say it takes up about 40% of your time if you're able to run your business, in order to help run it as successfully as possible. So once you've got that in order, you'll be able to focus more on the actual running. So that's where we come in, helping out to ensure that all your admin is kind of all streamlined and working really well. And it's created that elevated experience, not just for us, but for our clients as well. They now don't actually need to come and see us in the office. Obviously, we are available, but as we're doing everything online, they can contact us really quickly, through online meetings, phone, and through our apps and so on. And this has helped to bring our client-accountant relationship closer. A lot of people have a misconception that when you add technology, it feels as if you're kind of getting rid of that personal experience. But actually, it's quite the opposite. What we've done is, by getting rid of the mundane, non-value-added tasks that can be automated, we're now no longer wasting time on such tasks, and we're having time to call our clients, speak to them, see how they're doing, analyze their figures, a lot more and see if everything makes sense. Could there be something that we're missing or they're missing? And it's just a great way of us having that conversation and trying to dig deeper and make a difference and highlight to our clients kind of what's going on as well. So that idea that I have of bringing us closer and being the virtual finance director for our clients is now fully in place, and both parties are really enjoying this new way of working. During this time, obviously, our efforts have not gone unnoticed either. Majors Accounts was nominated for Independent Firm of the Year Greater London by the British Accountancy Awards for 2 years in a row. I myself have also been nominated for Top 50 Women in Accounting globally for 2 years in a row also, and for 3 awards by the Women in Accounting and Finance Awards 2020. So that's a little bit about us and our business. However, today what I want to talk to you about is some things that I think could help. It's end of year is coming up, and it's time to think of ways that you can enhance your tax benefits. A lot of people don't know that there are many out there. I'm going to go through some of those today, but there are many others, so I would be happy to help out if anyone wants to contact me after. But one of those is try to avoid getting caught in the tax trap. So the tax-free personal allowance for most people is currently £12,570. And when your taxable income reaches 100,000, your personal allowance is cut by £1 for every £2 of your income, which means that you will lose this personal allowance completely once your income reaches 125,000. So as an example, someone who gets a pay rise from 100 to 110 will lose £5,000 of their personal allowance. They will be taxed at the normal 40% income tax on their pay rise, amounting to 4,000. So that's 40% on the 10,000 increase, and then taxed at 40% on their lost personal allowance, amounting to £2,000. This means that essentially they pay £6,000 on the £10,000 pay rise, which is an effective rate of 60%. Not great. So if you're in this position, you should consider reducing your taxable income if you can, so it falls below the 100,000 level where the personal allowance starts to be eroded. There are 2 ways that you can do this. One is by making charitable donations, or the other is by contributing to a pension. Now, this could be a massive game changer. By contributing to a pension, you're making a tax savings in the form of getting your personal allowance back, whilst also saving for your future and benefiting from pension tax relief of 40%. So you wipe out the 60% effective rate tax rate completely. Now, there are many different pensions out there. It depends on whether you're a company owner, whether you're self-employed, finding the right one out there for you. But if you haven't started saving, then this could be a great way of saving for your future, whilst ensuring that at least for the time being you get more out of your money and it doesn't all go to tax unnecessarily. There's another thing that a lot of my clients have been discussing at the moment, which has been a child benefit. A lot of people don't actually know that they can get it, and there is a misconception amongst others where they can get it regardless of their income. So in a similar way as above, people will start to lose their child benefit when one half of a couple earns more than £50,000, and the benefit will be wiped out completely when one of you hits 60. So the frustrating factor for many parents is that the rule applies if one parent is earning more than 50, regardless of the other partner's income. So you could have both parents earning 48,000 each and have no problem, but if one earns nothing and the other earns 60, you lose the benefit. So this is something that a lot of people kind of don't realize, so definitely something to think about. And a parent with 2 children will get £1,828 a year child benefit, but for every 1,000 they earn over 50,000, they will lose 10% of their child benefit. So someone earning 51,000 will lose £183 from the 1,828 that I've mentioned. But if this is eligible to you, then this is definitely something to consider, because obviously nearly £2,000 a year, it's something. It can help towards some expenses. So if you're not taking advantage of this, definitely do so. But parents who have just tipped over the threshold can get around this also by increasing their pensions contributions, similar to what I said above. So what's counted for the purposes of child benefit high income charge is your salary after any pensions deductions. So this means if you contribute enough to your pension to get your salary back to £49,999, or just under the 50, then you will get the full child benefit again. Another option is to make charitable donations as well from any income over the £50,000 limit, which you'll need to declare on your HMRC tax return, and to kind of let them know that your income has come below. So if you haven't already, check this out. If your income has gone above the 50,000, don't be surprised if you do your tax return, you'll get extra tax charge, which will be the repayment of the child benefit that you may have deemed to have been overpaid. But obviously, if you have more children, you do get more child benefit. So you can go on the Gov website, you'll be able to find out exactly how much you could get. So I see questions are coming in. We have a question from Ramon on Twitter who says, I get embarrassed quite easily when I don't fully understand the terminology my accountant speaks about. I feel like I should know these things. What should I do? You shouldn't feel embarrassed at all. What I say to my clients, where I see maybe that I'm talking about something and I see they're not quite understanding, I put myself obviously in a business owner's shoes, or put myself in as if I was speaking to them. I don't understand much about their trade. So I will try to change the terminology to help them understand. But please don't be embarrassed. If there is something you're not understanding and you might think it's like so easy, or that you should know it, just ask your accountant, say, I don't quite understand this, don't quite understand that. They will be more than happy to help. But I know it can be really easy once you start talking to forget that the other person may not use the terminology on a daily basis, because this is the field that we're in and this is what we do on a daily basis. So if there's something you don't understand, please, no matter how simple you might think it might seem to the accountant, just ask. Say, I don't understand what this means, please let me know. And they will be more than happy to help you out. It's probably that they just don't realize, and they're used to speaking in that jargon all day long. So yeah, nothing to be embarrassed about. And there are many accountants who also have difficulty with a lot of terminology. So, if you don't work in accounting all day, it's understandable. We have a question from Ifran on Twitter who says, hi Eriona, do you have any advice as to what to do with dealing with cheaper competitors taking away business? So absolutely. I'll give you an idea. So with our business, we used to constantly look at our competitors, how much they're charging, finding ways that we could try and maybe be a little bit cheaper, or throw something in that's free to try and entice competition. But it really depends, what are you trying to compete on? And what kind of clients are you trying to take on? Are you trying to compete on price? Then, of course, that's going to be an issue. You're going to need to look at suppliers where you can obtain things for cheaper than you are, but you're going to be compromising on quality. With us, we decided that we want to be competing on quality of service, and that means in order to provide the best service, our prices may be slightly higher, but we're providing a service that someone who's cheaper than us will not be able to do physically, because you just can't. There are certain costs that you have to pay. So we've made the decision to really focus on that quality and make sure that we're making a difference for our clients. We're there when they need us. We're there when they need to call us, email us for whatever it is. And maybe that's something that you should be focusing on, and selling that to your clients, to say, if you want to go cheaper, fine, but will they give you X, Y, Z? And we've seen a lot of clients which we may have lost to competitors, which have come back because they have seen that actually it's a lot easier to obtain information, and the quality of work is on a different level. But it all just depends on what you want to compete on as a business. if you're going for price or if you're going for quality. And also think long term. If you have loads and loads of clients, are you going to be able to manage that at a low price? Your profit is going to be, reducing over time, and you're going to be working more. Is that what you really want to do in the long term? And you've also got to think of exit strategy, which a lot of people don't. You won't be able to work non-stop every single day. So what are you putting in place for yourself in the next 10, 15, 20 years, whatever it might be, to slow down? If you need to slow down, it means you won't be working as much in the business. You're going to need to employ others. Are you going to be able to afford that if you're going to be competing on price? So there's so much to think about on this, but it just depends on what you want to compete on. We have a question from Catherine on Twitter who says, as a director, I've always wondered why the personal tax-free allowance is so low. Is there a reason around the £12,570? Even if you only ever took that amount, it doesn't seem livable. So this personal allowance is global, as in for everyone in the UK, whether you're a director, employee, or anything like that. But I have to say it is now higher than it ever was before. It increases generally every year. But this is just kind of a tax break that the government is saying, up to this amount, we won't tax you. Anything above that obviously starts to get tax. There is national insurance on that amount, which starts to hit around the £9,000 mark. But it doesn't necessarily mean that this is an income which is livable, and especially London living costs, that wouldn't cover much, to be honest. However, it's just there to help ease slightly with the amount that you're paying in tax. If, as you said, you're a director, obviously you have the tax break, if you want to call it that, on the dividends, which are only at 7.5% up to 50,000. So maybe that's something to consider, but you're able to manage as a director how much you want to declare. So you could take out only what you need to live on and leave the money in the company. So essentially you won't pay any extra tax on that. But there are so many other kind of tax efficient ways of withdrawing your money. But that 12,500 is there just as a mini kind of tax break for everybody, just to say we're not going to charge you tax until you exceed this amount. But it is by no means an indicator on what people should live on, because in this day and age that's definitely not doable. We have a question from Sylvia who says, thanks for talking about this, Eriona. Although I'm a bit confused by what the government website says about this, there's a family element and a child element listed, but you only get both if your children were born before April 2017. Is this correct, and why is this like that? So today I was talking more about just the child benefit and who is eligible. For further details, I'll be able to help you out with kind of the finer details if you contact me after the show. But there are some quirks to it, and there is a limit on how much is paid, but I'll be happy to go through that with you if you'd like to contact me after the show. We have a question from Michael on Instagram who says, I want to take my business in a new direction and can't decide whether to start an entirely separate entity for it or create a brand arm with my current limited company. Will it make it easier overall to keep them separate or double my workload? So there's a few things to consider here. Obviously, if it's a completely different type of business, then consider maybe opening a separate entity to keep them separate from each other, so it's a bit more organized. You can keep track on how one is doing compared to the other. And I'm guessing it's a limited company, which you might have, so it could be creating another limited company that's separate from that. It could also be creating a subsidiary from the company that you have at the moment. So the business you have right now will invest in its own business, which it owns also, but again, it's a separate legal entity, but it forms a group essentially. So there's a group of companies. The other thing is maybe keeping it in the same group or in the same company. You have that history with your current company. So if you were going to potential suppliers, customers, they're going to be, doing research into you to find out what you're about, how long you've been about. They're going to want to see history, and that's something that your current business will have. So if you create a new one, it will be slightly more difficult for anyone to kind of trust your idea. It may be an amazing idea, but if it hasn't started yet, or there isn't any history to show exactly how great it's going to be, or to kind of translate onto paper, into figures, your passion that you might have, that you might find some stumbling blocks. It's not impossible, absolutely not. But one way to go around this is, as I've mentioned, opening a subsidiary. So you say, yes, this is a new entity. However, it's part of this group, which has had trading history, and there is some performance that they can go by. But it just really depends on, I would say, what kind of business it is and where you see it in the future, because that can really change how you set up now, what you want to be able to do with it, and whether you want them to be associated with each other or not, or is it going to be a completely separate brand? So there's a few things to think about, but I would be more than happy to discuss that. I love things like this, that they're so interesting to see where people want to go with their business. So hence why I'd need to know a little bit more information to give you some advice, but hopefully that's kind of helped a little bit. We have a question from Isabel on Twitter, who says, how is the child tax credit paid? Is it that we calculate it as part of our self-assessment and pay less tax, or does it come as a payment? And how frequent is that payment? So there's actually something you need to sign up with, with the government on the Gov website, and you get paid that to you on a monthly basis. So when I do my clients' tax returns, I have to ask them, how much have you had during the tax year from child benefit? That's added to the tax return, just to confirm that you haven't gone over the 50,000, because if you do, then we need to start restricting it, and we would let you know how much you need to pay back to the government, if any. So it is a monthly payment, and if you do go over, it's your responsibility to let the child benefit department know that you no longer qualify, and usually that's by a telephone call, although I've seen clients who have called and it hasn't been stopped, and they kind of didn't realize it, just because the monthly amount may not seem like a big amount, so you don't notice it as much. And a lot of my clients kept getting this money in, thinking that it had been resolved, and to find that at the end of the year they've got quite a lot of money that they need to pay back because they've spent it. It didn't seem like a lot, as I've mentioned, on a monthly basis, but it's something that they were left with to have to pay back to the government at the end of the year. But it is a monthly payment that will come to you, and you can find more information on that on the Gov website, and also sign up and kind of fill out the forms with all the information for your children and your circumstances. We have a question from Justin on Instagram, who says, does it make a difference if you're a single parent or in a relationship, and can both fathers and mothers claim it, or just one or the other? Generally, it should be just one or the other, because it's per child. If you're a single parent, it kind of works in the same way. If you exceed that 50,000, then it starts to get restricted until you reach 60 and you don't get any at all. So it's still, you still can claim it basically for either, whether you're single or in a partnership. But the only thing is, only one person can claim it. Both parents can't claim for the same child, because it's for one child. So definitely only one of you can claim that, unfortunately. We have a question from Cameron on Twitter, who says, it's my first year in business and I'm thinking of giving some of my team bonuses. Are bonuses taxable as well? If so, are there other ways to reward employees? So bonuses are unfortunately taxable, as if you'd given them their normal pay. So you just add it to their pay slips, and it's taxed as usual with tax, NI, and so on. Other ways to reward employees, there are kind of some tax breaks that you can get. Obviously, you've got £300 a year per head, per employee, sorry, £150 per year per head. But you can also make small gifts throughout the year as long as they're below £50 each time. If they go over, then that needs to be declared as a benefit, and it will be classed as if it was given to them on, money-wise on their payslip, even though you may have bought something for that value. So as long as it's under £50, and you can do this frequently, that's one way of rewarding employees. Depending on the bonus, I don't know whether that would correspond with it, but if you do it quite regularly, as long as it's under that 50, you should be fine. But that's kind of one way. There are quite a few other ways, but unfortunately I don't have much time to go through those today. I've got a couple more questions. We've got a question from Sienna on Facebook who says, I'm planning on setting up a print-on-demand Shopify store with customers in the UK and US. I'm not sure where I should set up the business though. Are there any benefits or disadvantages to setting up in the UK versus the US, and how does taxes work when selling abroad? So there are arrangements between the UK and the US regarding trading. So if you are living here and the business is being controlled here, I would suggest that the business should be set up here. Even if you set it up in the US, control and direction of the company would be here, so you still technically could get taxed at UK rates. But that's quite a big topic, which unfortunately, as I mentioned, I don't have much time to go into today. But if you want to contact me after, I'd be more than happy to help, and we can go into more detail. So the poll results are in. We asked you, are you aware of all the tax breaks you could be receiving? 20% of you said yes, 20% of you said no, and 60% answered unsure. I mean, this makes a lot of sense. Unless you speak to your accountant at the end of, or just before the end of the year, just to see, what could be available, you probably won't know. They say you don't know what you don't know, right? So I would say just a quick email or pick up a phone call to your accountant and say, this is my situation, or they will probably know what it is. Is there anything that I can do in order to save some tax? And they may have some ideas, which they probably don't have time to call every single client to let them know. Some obviously have newsletters and so on, but it really is kind of specific to individuals. So give them a quick call and see what's out there. Maybe they'll be applicable to you, maybe they won't, but at least you'll have an idea of what's out there. Or if it's not applicable to you this year, maybe there's something you can do to actually ensure that you can take advantage of some tax breaks that are out there. So I just want to say thank you all for tuning in this morning. If you want to get in touch, please contact me via the Majors Accounts website at majorsaccounts.com. You can also email me directly at eriona@majorsaccounts.com. And we're also on all social media platforms, on Facebook, Instagram, Twitter, and LinkedIn. So feel free to get through to us in any way. We also have our own app, which you can download from our website, which is packed full of great calculators and just general information, which we hand out on a weekly basis. And there you might also get some ideas of how you can take advantage of a lot of tax breaks that are out there. So please do check that out. And on our website, we have a news section which is updated regularly with little bite-sized kind of chunks of knowledge and any news that's come up from the government or support that's available. So please do also check that out. Now, coming up on Ask the Expert tomorrow is law tech entrepreneur and professional negotiator Clive Rich from LawBite, making legal advice accessible and affordable for SMEs. So tune in to learn all about intellectual property and how it can raise value for your business. A reminder, if you need any more advice, please join the official Intuit QuickBooks SMB community group on Facebook, where there are accountants and business experts on hand 24/7. I've really enjoyed answering your questions today. I hope they have helped, and I wish you all a great rest of the day.